happened after the next trade, set of trades? 5 and 6, now there's less days to go, still about 35%, and we're picking up value in the butterflies. They're back up to 91 cents, the at the money, 89 and 91 cents for the two closest to the money. You'll notice that the butterflies south of the money are a little bit more than the ones north of the money. Why is that? Skew. I'm not going to talk about it today. Chapter 10 in the book. Because just simply, vol higher makes vol, and the vols are higher at the lower strikes, right, because of the skew. The puts are generally pumped up, right? So that makes those butterflies, pumped up ones, pumped up vol makes those cheaper than the right side ones. So actually, that would be counter to what I'm telling you, because this is saying the right side is lower. Why is that? Because I'm actually using what we call the SMILE model in this. But I'll demonstrate it when I pull up risk. As long as I put my foot in my mouth, why don't we pull up Risk Illustrator and show this? This is after 5 and 6, so I can go up here and pull up Risk Illustrator after trades 5 and 6. This is, let's pull this up here. And let me put this in front of you as all. This is what you see when you open it up. I'll go full screen on it. Got to enable all these macros. It makes sure that you are looking at these dates when you go back, because you'll. What I've done is I've gone to where I've made all these trades, 20 of them, and then I've gone into where I do all the trade input and erased everything subsequently to that date. And here's Trade Tracker that has a summary only going up to trade 6. And if I go into here's the spread dissection, here's the butterfly dissector, and here is the trade analysis where we do our modeling. And if I change this model to the equity shaped one, you will see that the butterflies, if I put the underlying right at 500 and we zoom in, we can see that because of the higher vols on this model on the left here, okay, you can see that left of 500, they're higher vols, right of 500, they're lower. So let's go look at the butterfly prices. You'll notice that just 2 strikes away, the 480 to the downside where it's higher vol, that's a 76 value, and 2 strikes higher where it's a lower vol is 85. So that's the point I was trying to make. All right, I can take my foot out of my mouth. Thank you. Oh, God, where was I walking? Oh, my God. Okay, so that's that. Okay, so let's continue on with this discussion of the next page, when volatility was about the same, but 4 days have gone by, and now the at-the-monies are 92 and 93. They're creeping up. Let's go to the next one. Okay, let's go to after trade 8. Now here's where it exploded. 50 vol, 29. Even though time went by, at the money now is close to 480. And look at that's done to the butterflies. They're down to 71 cents a piece, or 73 cents. They're crushing. The vol exploding is crushing butterflies. Because it's saying, you can't guess which one's going to be king of the hill. Ha, 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 ha. They're all going out worthless. We're going a million miles from here. That's what vol exploding says. All right, let's go to the next one. 24 days now. Still 50 vol, but they're creeping up the at-the-money now to 82 cents. The 2 at-the-monies are 82. They're creeping back up. And go into the next one. That's trade 10, 22 days ago, and vol has come out. The gas has come out, And now look at the butters. They're starting to increase. The at-the-monies are $1.13 and $1.10. And the next one, 14 days to go. More time going by, still around 35 vol. The at-the-monies are up to $1.37 and $1.40. They're starting to blossom. Okay, still pretty cheap. Do I got any more than that? Yeah. Now with 10 days to go, I think. Let's see, 8 days to go. 8 days to go. We're over $1.80 with these things. $1.87 and $1.81 for the two closest to the money. And I changed the scale on this because they went up to a few dollars. The at-the-monies went to the at-the-money butterflies $3.45 with 2 days to go. And we're trading at 502. And I think we ended up like a buck from there. Then we end up at 501 or 500 even, something. Yeah. All right. So back to where we were. I think we were on, well, I don't know where we were. Let's see. Nice to have somebody remind me where we were. Okay. Let's see where we are here. Sorry about that. Just got to figure out where I was. Let's see how we are on timing. Maybe I kind of sort of speed things up. 3:30. We're good. We're good. We got plenty of time. All right. So were we here? Were we at trade 12? Maybe if somebody knows where we were, they can tell me. That doesn't look familiar. That doesn't look that familiar. Doesn't look familiar. Doesn't look familiar. Okay, I think we were around trade 9. Yes, we were at trade 9. Okay. So where we were, where we last left our heroes, just to remind everybody, I had 2 short 20-lot verticals. I bought the Condor because they depressed the price down to 82 and 82, $1.64. It was a bargain. Bought that. Now I got the butterfly and a short 40-lot vertical. That's only $10 wide. That's what I have. Right? That's after trade 9. Right? Okay. So here's where I got to worry. This big white part. All right? That is going for 17,000 credit, but it could go to 40,000 credit, which means debit for me to buy it back. I can lose $22,000 on that piece. I'm not worried about my butterfly. I could only lose 25, 50, 44. I'm still going for my 490 target. Okay? Now, what happens? We rally up from 464, and I go, oh, thank heaven for little girls, little bounces in Google. And I buy, I'm just saying, I'm taking, oh man, I was worried about that. I'm going to take that back. Give me those verticals, baby. I want those verticals. So here's the plan of buying that vertical. The red is the plan, and it changes what's in green to what's now in magenta. And what's it going to cost me? $32,000? Oh, because it's a call spread that I'm selling, or I'm simulating up here. Selling a call spread and getting $32,000. Really, it's buying back the put spread for like synthetically 8. And I think the actual trade I made was buying the put spread back. Let's go say, I don't think I sold the call spread. I must have just been having a bad stimulating moment there and simulating the wrong thing. So what this 40 lot was, yeah, it's buying the put spread, and I paid $7,600 right here when the market was up at 486. So I didn't get the full advantage. It says 494 there, but I was just evaluating it afterwards. But when it was 486, I said, $22 rally, hello, mama. I'll take it. So I spent $7,600, and you saw that it was like 17. So I got back a lot of money there. All right. Now what do I have? I must just have post-trade 10. Here's what I actually have in post-trade 10. I got all this stuff, 10 by 20 by 10, and I got a 10 lot vertical. But synthetically, it's a butterfly because this is a 3-point box. So now we're talking about a box a little bit. So let's go talk about that box. Or at post-trade 10. Okay, so where are we here? Just trying to find out where I'm going here. 10, sorry. When I'm zoomed in, I'm worthless. Let me zoom out. I'm expiring worthless in front of your very eyes. Okay, so I want to see trade analysis. There's the 40. Now, my actual position, okay, let's zoom in here. Let's have a little discussion here. Okay. Actually, all the positions, you know what I'm going to do? Because this planning stage is a 40 lot here, I'm going to go and pull that up. I'm going to pull that baby up because I can do that. Go in File, Open. And where are those? They are in Google PWB and post-trade 10, before trade, right here. See how I name it? Google BWB 10 RI risk illustrated before trade. And it will ask me, what were you thinking? No, it won't ask me that. It might ask me that, but let's see. These are all the things just to check. And here is, this is after the trade actually. So I want to go to trade 9, sorry. Open, 9, before. I can fix this one. So you could, once you've done all the trades, you have this backtracking functionality that can take you back to any step and redissect and do postmortems and find out what you did wrong and, you know, ask yourself what you were thinking. So I'll just show you how that looks. So in Trade Tracker, it shows you all the trades up to 9, and now I'm just actually it's to 8. Okay, I know what I need to do. I'm just going to go to here and do it, and go to Trade Tracker. This is back to 10. Here's trade 10. Here's buying the 40 lot. I'm just going to remove this 40 lot. Okay. No, you know what? What I wanted to tell you allows for it. So okay, here it is. Here's what I bought. I made the trade. So there's no simulations because that's an actual trade. This is where I want to be. Perfect. All right, so what am I left with? It says I got a butterfly. But the actual position, notice that's not a butterfly, but synthetically it is. It's got this 3-point box in there, a 3-legged box, a 10 lot of a 3-legged box. Where is that box? Okay. There it is. You can hide certain rows and stuff with the way this is built, that there's a 10 lot box in there. And when you take out that 10 lot box, it makes it a different, and it's based on where you set your pivot strike. So I'm going to set my pivot strike at 490, right near the money. And now it's boxing out a bigger box, and it's saying you're left with an iron butterfly, just a straight iron butterfly, but